Hi, in this video I want to have a chat with you about gold. I got a lot of people asking me questions about whether you should buy gold or loads of other different commodities and asset classes, but I'm going to focus on gold for this video. Here is 4,800 worth of gold. So this is an ounce and this is 50 grams. Today the value is down 10%. Now gold, like anything else, will increase and decrease in value. But why I want to talk to you about gold is purely because I hear some people and some investment advisors say things like hold 5% of your portfolio in gold, because if the economy goes wrong and we all go back to trading in gold, you'll have something. And let's be honest, if you had 100 grand, this is what that 5% looks like. This is going to do absolutely nothing for you should things go that bad. So stocks and shares will historically have performed really well, and as an asset class that will not have massive dips in performance over decades, which this has. If you look at the graph on the screen, you're going to see the Zurich dynamic fund, which we use to get equities, exposure to equities, which are stocks and shares. That blue line has completely outperformed the gold. So you see there, the gold return has been 352% since 1990, where the performance of the dynamic fund has been 2,314% over the same time period, which is ridiculous. However, let's go down and look at the positive towards gold. Gold has completely outperformed the dynamic fund since 2000. And this is because at the beginning of 2000, we had the dot-com bubble burst, followed by September 11, followed by a financial crisis. And people would want more of the gold, creating more of a demand for gold and obviously increasing the price. The point here is that over since 1990, look at the difference in the performance. You have almost from 1990 up towards mid-2000 a complete flat line. And we just don't want our clients having access to an asset class that can perform that badly. Gold has what's called a correlation to equities, stocks and shares. So usually when equity markets are up, gold price will be down. And when equity prices start to fall, gold prices start to increase. So this is seen as a safe haven. The problem with this safe haven though is that it can underperform completely for long periods of time. And I think you need to be educated more in that when stock markets fall, they generally rebound. So let's look at COVID-19 2020. In 2020, markets fell quite sharply, by up to 30% in some instances, but they rebounded very quickly. So equities will always be a volatile investment. The reason I'm doing this video is to try and get you to understand how equity is probably the best asset class to perform over the long term once you're aware that it will go up and down in value. And if you're aware that it will go up and down in value, I don't think you need to hedge against the likes of gold to protect yourself from what you know is going to happen. The other reason that people hold gold or invest in gold is they think it's inflation proof. So usually, historically, actually gold will probably keep in line with inflation, which is the cost in goods and services going up. However, as I've experienced, there's been a sharp decrease in this. This was worth 4,800 when I bought it about a month ago, and now it's down about 10%. So if I was going to use this as a hedge against inflation or an emergency fund situation to have access to something that wasn't going to go up and down in value so much, I would have been better off clearly leaving it in the post office or the credit union. That would have given me easier way. I have to go back and sell this to the broker to get it back, which is hassle, but also it's down 10%, which isn't great. So rather than trying to use your money in a way that you're going to put 5% of your fund or 10% or whatever the money is into gold, or if you're looking to hold it in cash or looking to hold an asset class that doesn't increase or decrease, you're probably just better off sticking to cash for that short-term cash requirement. Then lastly, before I finish up the video, what I want to say about this is that I've heard people in the past saying they're going to hold gold as, not from the emergency fund point of view, but just kind of as an alternative to cash. The problem with this is that if something does go wrong, like I've experienced the last couple of weeks, this has decreased by 10%. So therefore, if you're looking to hold cash and you need to hold cash for short-term expenses or short-term unexpected expenses, maybe over 1 to 3 years, I think you're probably better off sitting in a deposit account because you won't experience that volatility. So although this might sound sexy, it might sound great to have it in your portfolio and you can tell people you have gold, even though this is only like 4,200 worth of gold now, I think it's extremely important that you get really good advice and look at asset classes such as equities over the long term if that's what you're looking to invest in, the long term. So that's my thoughts on gold. Hope you liked the video. If you do, please hit the subscribe button.